This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
OPEC said the global economy may perform better than expected in the second half of the year despite trade conflicts, and refineries' crude intake would remain elevated to meet the uptick in summer travel, helping to support the demand outlook. In a monthly report on Tuesday, the Organization of the Petroleum Exporting Countries left its forecasts for global oil demand growth unchanged in 2025 and 2026 after reductions in April, saying the economic outlook was robust. India, China, and Brazil are outperforming expectations so far, while the United States and the Eurozone are experiencing a continued rebound from last year, OPEC said in the report.
Oil prices rose on Wednesday, boosted by expectations of firm summer demand in the world's two largest consumers, the United States and China, though gains were capped by analysts' caution about the wider economy. Prices have seesawed in a tight range as signs of steady demand from an increase in travel during the Northern Hemisphere summer have competed with concerns that U.S. tariffs on trading partners will slow economic growth and fuel consumption. Brent crude futures rose 36 cents, or 0.5%, to $69.07 a barrel by 0646 GMT. U.S. West Texas Intermediate crude futures were up 47 cents, or 0.9%, to $66.99.
Moving on to the top news in the energy sector.
Surging clean power supplies have allowed China's utilities to reduce their emissions from electricity production to record lows during the opening half of 2025. Carbon dioxide emissions per kilowatt-hour, kWh, of electricity averaged 492 grams during the opening half of 2025, according to data from energy portal electricitymaps.com. That was the first ever reading below 500 grams per kilowatt-hour, and is down from 514 grams per kilowatt-hour during the same period in 2024 and 539 grams per kilowatt-hour from January to June 2023.
The International Air Transport Association on Wednesday stepped up criticism of the European Union's sustainable aviation fuel mandate as a costly initiative that is not helping the environment as regional supplies there remain low. The idea that you're buying sustainable fuel and then transporting it to use in Europe isn't the right way to do it, because you're clearly increasing the carbon footprint of that fuel as a result of the transportation costs, IATA's Director General Willie Walsh said at a media roundtable in Singapore. IATA estimated in June that production of SAF, which is considered a low-carbon replacement for traditional jet fuel, is expected to reach 2 million metric tons, or 0.7% of airlines' fuel consumption, in 2025. Next, we have the top news in metal markets. Iron ore futures climbed on Wednesday, buoyed by strengthening ties between top producer Australia and leading consumer China, though gains were capped by concerns over persistent weakness in China's property sector. The most traded September iron ore contract on China's Dalian Commodity Exchange ended daytime trade 1.05% higher at 773 yuan, $107.70, a metric ton. The benchmark August iron ore on the Singapore Exchange was 1.04% higher at $99.95 a ton, as of 0754 GMT.
Gold rose on Wednesday, supported by a pullback in the US dollar and bond yields, while investors digested data showing an increase in US consumer prices last month and awaited further clarity on US President Donald Trump's trade policy. Spot gold was up 0.5% at $3,339.88 per ounce, as of 0644 GMT. U.S. gold futures edged 0.3% higher to $3,346.70. The dollar index eased from a one-month peak, making gold more attractive for other currency holders. Benchmark U.S. 10-year Treasury yields retreated from multi-week highs.
We will now look at the top news in the agricultural sector.
Chicago wheat futures rose on Wednesday after a Russian consultancy reduced its production estimate for the world's top exporter of the grain, but prices remain near 5-year lows amid ample supply and sluggish demand. Corn futures climbed as the contract continued to enjoy a bounce from low levels fueled by bargain hunters and short covering. Soybeans also gained, but a lack of Chinese demand for U.S. beans and expectations for a large U.S. harvest kept a lid on prices.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.